Welcome back to my YouTube channel, guys. This is day 2 of me teaching you guys how to read a candlestick correctly. Make sure you stay till the end of this video. Don't forget to like and subscribe. Now let's dive in. So our focus and topic for today is going to be the control shift candle, and this right here is a perfect example of what a control shift candlestick look like. Control shift candles shows takeover in control bracket reversal happening in real time. Anytime you see a candlestick like this print, it just tells you that at a certain point in time there was a reversal happening in real time in the market. This is a perfect example of how a control shift candlestick is formed. This is a bullish candlestick showing you what a massive buy attempt from this opening to this particular close. Thereby we can also see what a seller's attempt to take control of the market, thereby showing us this particular week. When we go to the next slide, we can see that massive buying attempt that was made from this opening to this particular point has been totally reversed down to this level, thereby giving us a close of that candlestick near what? Near the opening, leaving us with a very small like body. When we go to the next slide, we can see different type of control shift candlestick. One has like an equal body, one has a very low body, and one has like a a little bit large body with no lower wick. The color doesn't matter. What tells us the story? Like I said, every candlestick tells us a story. What tells us the story behind all this, or gives us maybe a massive idea behind all this, is just the wick. The wick is what tells us the story. Now when we go to the next slide, we can see scenarios is identical for what? For bullish control takeover but reversed. Large downside wick is what tells the story here of sellers losing control to buyers. Now this is another perfect example. In this case, this is a bearish candlestick that opens here but attempts to close below. But while market push price downward, we can see an attempt here where this red is. There was what? A reversal. And who made that reversal? Buyers. Buyers interfere in this market, thereby pushing price from this level back to this level, leaving us with what? A control shift candlestick. You get? Now you can see the difference. This right here is what? Buyers pushing price above and sellers reversing the attempts, thereby giving us a close here. This other one is what? Sellers pushing price below and buyers reversing that attempt and giving us a close. But all of them are what? Control shift candlestick. Now a lot of us know this control shift candlestick as a pin bar, but the general name for it, to just keep it simple, the general name for all these candlestick, that's why I'm just trying to give you guys more like a very good summary. When you see them right in the market, you can be able to identify them quickly. A candle that closes like this is called a pin bar. They can be very strong if we use them in the right context. Here we can see a bullish and a bearish control shift candlestick, right? This right here is a perfect example of what a control shift candlestick stands for if you use it in the right context. This is a bearish candlestick with a very massive attempt from sellers to push price below, but we can see how buyers managed to interfere, thereby reversing all those attempts from sellers back to this level, giving us a close near the opening of that candlestick. And you can see the next candlestick that was formed is what? A bullish candlestick, a very strong bullish candlestick. You can call this a strength candlestick, giving us a massive move from that level. Right here, it is automatically telling us that buyers, immediately after this control, buyers still took total control of the market, pushing price above, giving us another strength candle. You know, I told you that just after a particular strength candle, there's high chances that market might continue in that direction, and this is it, right? We have another strength candlestick here. Above this level, we can now see another massive buying attempt from this opening upward to this particular level. Then sellers interfere, thereby reversing all those buying attempts from buyers down to this level, giving us a close right beside what? The opening of this candlestick. Just after that, you can see another move, right, telling us that sellers are taking total control of the market. You can see this massive strength candlestick print. Just after the strength candlestick print, The next candlestick is another what? Massive strength candlestick, taking out this low for us, which clearly shows us the real impact of this control shift candlestick. And when we dive right to our charts, we can clearly see perfect example of what a control shift candlestick is. Let me just spot out a perfect example. Over here we can see the first control shift. This particular candlestick shows us buyers made an attempt to push price upward, but sellers reversed the attempt, thereby closing price just near what? The opening of this candlestick. And the next candlestick is now what? Is now a strength candlestick, a bearish strength candlestick printing. Then we can count this as what? As our indication. Then we can see our correction, we can see our continuation, how price continue to move downward, giving us this low, right? So this is a perfect example. So this is exactly what a control shift candlestick stands for. Over here we can see a control shift candle is the first indication that buyers or sellers are claiming control over the leading party in real time. So what a control shift candlestick tells you is that at this point, hey, sellers are trying to take over. At this point, hey, buyers are trying to take over. So if you know how to use them in the right context, trust me, you are always going to be ahead. Use your head. We have a bearish and what? A bullish control shift candlestick. The moment you see each of them, what you want to see is at this point, is buyers trying to take over or sellers are trying to take over. Once you know these things and use them in the right context, you can use them as a confluence. It doesn't mean if you trade smart money, you need to abandon your smart money concept and start focusing on candlestick. No, you can just add them as a confluence in your trading. So I'll be stopping here. Don't forget to like and subscribe, and make sure you share this video to your friends.